Welcome back to Optimum Live, episode 25. And this one, we've got the top 5 myths of auditing. Really interesting. We're going to bust them and really find out an awful lot more. Thankfully, you'll be pleased to know it isn't just me. We've got 2 people here that know what they're talking about. So stay tuned. Top 5 myths getting busted. So welcome back to Optimum Live. Delighted to say I've built you up there, the experts. And welcome both of you. The first time, second time being on camera, but first time in the studio for Hannah Matthews, Head of Assurance and Accounts.
Hello.
And Tom Absalom, your first time full stop.
It is indeed, yeah.
And you're, what do we call it? Audit Senior.
Yes, yeah. Been doing audit for the last 8 and a bit years now, so.
I love that. And I know that during this conversation, we're going to be looking at this from the angles of companies, charities and academies.
Yep.
Uh-huh.
And I know before we came on, we were talking about you've been doing charities, working with charities 5 years?
Yeah, 4 or 5 years now.
And you love it.
Yeah, it's fantastic. I think it's really, it's good to do work for a charity in comparison to a limited company, because charities are for the benefit of the local community, for the benefit of a greater, bigger cause as well, rather than sort of lining someone's inside pocket. So, no, it's really, it's quite rewarding doing work for charities, definitely.
I can imagine, and I know, Hannah, you were at pains to let me know when we do the sort of pre-show briefing, is that Optimum as a whole, of course, plenty of companies like mine and everything in every industry going, but very strong in working with charities and academies. Of course, the education sector is big.
Yeah, it's something that we've been involved in for a very, very long time. Our audit partner, Rob Stokes, has been involved with academies since their inception. I got involved around the beginning of 2017, and I love it. When you go into a charity or an academy, you're faced with people who want to further education for children, or benefit the community with not much resource and not a lot of money. And it's amazing what they can do with that.
Red tape.
So much.
Yeah.
So much, yes.
No, I get that. So through all of this, we're going to be trying to make sure that we are including all of those 3 key elements. Right. Let's kick straight in. A myth about auditing. It is just about checking the numbers. Audit is just about checking the numbers. Is that fair?
No.
I mean, yes and no. Obviously, one of the main things is an audit, you've got to make sure that they show a true and fair view. So that's not just the numbers. That includes the disclosures that you also include in the account. So making notes about turnover, stock, anything like that. That a reader of those accounts can go, okay, I get a full summary of what's happened for that charity, limited company, academy for the financial year. It also then, us going in there and providing assistance to them, it gives them more confidence about what we're doing and what they're doing, and making sure that, like you say about the red tape, they're not crossing that line, they're doing everything as we expect them to, basically.
And it's down to, I promised you I wouldn't get into too much detail about this, but I'm going to use the word thresholds for a minute. And suffice to say, I think we can say there's different thresholds depending on turnover, assets, foreign ownership, things like that. And equally, I went off on a wrong tangent, but it's still an audit of a kind. It's due diligence for acquisitions and things like that. You have to dive deep into more than just the balance sheets.
Yeah, absolutely. And ultimately, as Tom said, we're providing an opinion on financial statements, or in the example you've just given, we are providing assurance to whoever has engaged us, in the case of due diligence, for example. But overall, you actually have to look at the whole picture. I think to be a good auditor, you need to be a couple of things. One of them is nosy. You need to be willing to ask difficult questions, but you've also got to be pragmatic and open with your client too. And we expect that two-way. we're looking at the full picture. So we're looking at how boards are structured and how well their governance is structured and the effectiveness of that governance, as well as looking really low level at the transactional level. However, there is something we would specifically like to bust. We don't check every transaction. That doesn't happen. So people think that you go into a company, into a charity, and you're looking at every single line. We don't. It's actually all sample derived. And what drives the size of our sample, or where we may look specifically, is the risk.
Yeah.
So our very first port of call in engaging with any client on audit is understanding risk. And to do that, we have to look at governance, processes, culture. We're effectively looking for the whole story. And that is what then informs our opinion on those statements.
Fair enough. So I think, put simple, audit is not just about checking the numbers. Definitely not. I almost get this feel that you're like detectives. You've got these little clues that could lead you on different directions.
Oh, definitely.
Yeah?
Yeah. And I think that's personally what I find quite exciting. And that isn't meant in a negative way at all. Sometimes we see charities that are staff members specifically that are like just totally oversubscribed, you know. Their weekly hours for work is X. This is the amount of work they do. And then we go in and we look at the underlying systems, the processes, and actually part of it becomes about, okay, so how can we improve the internal control environment, number one? And with that, can we actually make efficiencies? So we can't implement those ourselves. They're recommendation we give the client. However, you're actually making someone's day-to-day better. And
I hadn't thought of it that way. I think in the back of my head, I was almost having a separate question about how can I put this? Almost whose side are you on when you're doing this, I guess is the blunt way to say it. And I guess you going in neutral is almost the impression I get. And it might be that it's like going, guys, you're doing something wrong there. Or actually we could help you here, but you're more efficient, I think is an obvious one, isn't it? Mm-hmm. Yeah. So you are sat as a neutral party in this.
You always go in with we have a concept called skepticism. Don't ask me to spell it. We have professional skepticism, and we always have to go into every engagement with a certain level of skepticism. However, that doesn't mean straight away we're looking to go and catch people out. Actually, what we want is the opposite.
Yeah.
We want to help clients mitigate risk. We don't want to see clients in trouble. You don't want to go into an audit and uncover fraud, and that's not. No. People think that's a lot of what we do, and actually that's not the case. It's a very small part of what we do.
Yeah, I can imagine. Or equally, sorry, Tom, I was going to say is identifying that you're leaving yourself vulnerable to an accusation of it. Mm-hmm. You're not, but be careful what you've done there from an innocent mistake could, if it grew. I've seen stories like that take place, and it was like naivety has led them further down a path that they had no intention of doing it.
Yeah.
I think one of the difficulties is that we're going in there and basically saying, well, we'd expect it like this, which can sometimes put people's front up and go, well, hang on a minute, really? This is how I've been doing it. And, you know, we want the best for our clients. We want to be able to go and help them to get a unqualified audit report, which at the end of the day is what everyone wants, because it then goes out in the public eye and people see and go, okay, well, you know, this company is doing it right. It shows a true and fair view of their statements. So I can invest in that company. I can, I can put donations to that charity, and they're all going the right way around. I think sometimes when we're doing our sampling, if we've got a sample of, say, 20, 30, if we start doing that and we find one error, that could be one error in the whole sample, but we selected it. It could be one error, but everything else is wrong. So we've got to then consider, okay, we need to go into more detail of that, which can then again, sometimes the clients will maybe go, oh, why are you asking about this? And said, we just want to make sure that we're doing our job, but also that your accounts are, as you say they are, as are, expected. So I think it's quite difficult for us going in and asking questions can sometimes put clients in a difficult position of, well, this is how we do it. And, it makes them feel a bit taken aback sometimes. But it's, like you say, going back to those difficult questions that we've got to ask. and making sure that they're all happy more than anything else.
I think it's about, Tom's absolutely right in what he says, and the way that we try to get a positive reaction from clients, or engagement rather, should I say, is by, we have pre-planning meetings. So for me, audits are very much about the relationship with the client too. So say a client has a finance team, and there might be one individual in that finance team that could be very nervous, for example, just because that's the kind of person they are, or maybe a little bit defensive. You also need to think about, how am I going to communicate with this individual? Because ultimately we need to get here. It doesn't necessarily matter how we get there. We just need to get there. Now that might be that I'm going to go and see them, or it might be that I'll have a Teams call with them, not picking up the phone, not just typing it all over email. We've got to be very responsive. And I think auditors, there's often a stereotype that you're stuffy individuals who are incredibly boring and, difficult. That's certainly not us.
No. And this is why the benefit of, content like this is that people get to see that, you're definitely not. I mean, I love the sort of succinct summary that you guys had in the notes to me, is that it's not just about checking the numbers. That's the myth being busted. It's about confidence in governance, in processes, decisions, that have been made and are yet to be made, I would imagine, both as important, and the story that the numbers are telling. So there's an interpretation, there's a narrative to go with the black and white figures.
Yeah.
So
we'll probably touch on this a little bit later, but talking to the client is extremely important for that story, because that informs you not only where the risk is, but where things are supposed to be moving. And I mean that definitely in the case of the numbers too. When you're talking to a client, getting little bits of information here and there, you then have a picture and a flow for where you feel things are going. I think auditors are particularly good at recognizing patterns, and we do it without even realizing. And that's how we can hone in on various elements.
Including, I was almost there imagining, including a break from patterns when you suddenly go, why have you suddenly changed that?
Yeah.
That's, you say about people at the front about sort of, we've always done it. There could be times when you go, that's not the way you guys have historically done this. What's changed?
Yeah.
But then that could mean that a different individual has processed something, or it could mean that that's the rabbit hole we then go down to find out why that has happened. Whether it is for a very good reason, or whether it is something that potentially could lead to something more drastic.
Yeah. Okay. I love it. That makes complete sense. Another myth about auditing that we're going to try and bust. If nothing's gone wrong, our audit risk must be low. And I would sit naively, and we've overly said that I'm very naive about audit, that if nothing's gone wrong, sure, there's no problem. But this is obviously a myth that you're about to bust on us now.
Yeah. For me, we don't necessarily follow mistakes. We're following behavior. So when I've just earlier said to you about talking with a client, having those discussions, talking to their team, observing, that's how we see behavior. And when we're looking, one of the things we're required to do is look at the internal control environment. And by that, it is what it says on the tin, from your business, for example, you've made a payment out of the bank. But has someone else looked at that and authorized it? You're an owner-managed business, slightly different for you. But if it was one of your team members, for example, someone else should have sight of that. Things like that. All of those little snippets and understandings that we obtain as we go through, that informs our approach and what we're going to do. And often it isn't the mistakes on the face of it that's the problem. It's the behaviors over here, because behaviors lead into different decisions being made, different motivations for those decisions. The deeper you dig, eventually, as you say, with the detective work, so to speak, that's where we get to.
And I mean, I'm almost envisaging as well, you mentioned charities being something you've loved being involved in. And I would imagine it's got to be the same for academies. There is changes at the helm, or, in the team at the helm, if you will, because people might be in there for a 2-year stint or something like that. And that's got to have an impact on what's going on. And so it might not be a mistake. It could be a change that may or may not be a good route to be taking yourself.
Yeah. a new finance software, for example. So old finance software, everyone was very comfortable. New finance software, everyone's had training. Have we done enough work about the transition from one to another?
Oh, wow.
That's a big risk.
Because again, the controls will be different from one to the other. The processes will be different from one to the other.
The codes,
exactly that.
What goes where.
Yeah.
He says
exactly.
with a degree of experience on that.
Yeah.
And with that kind of thing too, there's time pressure often. Because this software provider over here wants to switch you off because you're not a client anymore. Bye-bye. You don't want to pay for an expensive read-only license and this transition. So on top of that, you've got time pressure, which then means that internal controls might be bypassed. I'm supposed to do this job. You're supposed to do that job. Actually, we're up against it. Just get it done.
Yeah. I know that you put, for example, in a lot of situations, it could be one person that's controlling money, journaling approvals, whatever. And I don't say that in a derogatory way. I mean that that's a person that suddenly has a bad day or has gone through something that means they're not thinking about it properly. And so I'm almost there going, whilst we've said nothing's gone wrong, so the risk must be low, again, it's not on a witch hunt for those mistakes. No. You're my safety net, surely.
Absolutely.
Isn't that the way that I should be seeing? We've mentioned earlier that people suddenly might get an affront because they're going, that's the way we've always done it. It's like, actually, you're my safety net.
Yeah.
You're going to make sure I don't make mistakes.
Yeah. And I mean, at the end of the day, we're all human, right? We all make mistakes. But it's then going, okay, we found this mistake. Is this a result of A or B? Or is it just simply, you're, like you say, you're having a bad day, you've inputted something wrong. And it's then following those processes and controls to make sure that it doesn't occur more times throughout the year, making sure that it is simply just a one-off mistake that we can then go, okay, that's fine, we'll make that adjustment if we need to, and we'll advise them to make that adjustment so we're happy with the accounts, or whether it is simply, it does lead us down a rabbit hole again to make sure that we're finding all of those.
Yeah.
If you think about cash, right? So the cash risk, less and less relevant now because we all go onto card payments, but an example of this would be, I don't know, you work at a coffee shop, wherever you are, you're cashing at the till at the end of the day. Historically, you've always done it on your own, or whoever the individual was on shift, they've done it, you've done a sheet, you've signed it off it goes. Let's say cash goes missing. It wasn't that individual, necessarily.
Yeah.
Or maybe it was a mistake, but actually the numbers are saying that the variance is it, or the cash should be this and it isn't. Without somebody else there checking that, signing that off, how on earth is that person protected? So it's like in the case of the post office scandal. I know that's a very, very different scenario. Yeah. But they had a piece of software that was not fit for purpose. However, you had postmasters doing reconciliations on their own it was their word against a giant's word. And look what's happened.
Well, quite, exactly.
So much of this is about actually protecting the individuals too. It's not about a witch hunt, as you put it.
Yeah.
And I think that, I was umming and ahhing whether to mention that example at all. But since you've pulled the pin, I'll briefly touch on it, is that for me is also an over-reliance on automation or on systems, is that there still has to be, whether it's interpretation, whether it's take the human element into it. And again, that's where the audit goes. I loved it when you mentioned that you used the cafe example. One of the things that I know Rob and I had spoken about in the past with, say, a charity, for example, is that they'll have other outlets to help support, raise money for that charity. Yeah. And a cafe is a relatively common one, or a shop that is actually raised. So suddenly you've got a different way, a different subset of people and knowledge and experience and things like that. And it's to have that safety net, to bring it all together, to go, let's make sure everything's being done properly.
Yeah. And in the case of a charity, the added layer of complexity there is resource. Because to have someone as dual signatory there to sign that off, that means they need to have paid somebody else. Yeah, so that actually costs the charity. So a lot of this as well, or the key in having good auditors, is also finding auditors who are pragmatic. Now, in that situation specifically, someone has to be available. That's what you should be doing. But there are other instances where, the trustees would take a view, and don't forget, ultimately, it's the choice of the trustees. We're there to do our work, provide our recommendations, but ultimately in a situation, in a charity setting or an academy setting, ultimately it's the trustees who make that decision.
I think I've used this phrase in a few different ways, is that there's an element of not necessarily just proving that you haven't done anything wrong, because you'd kind of go, well, surely that's a given, but you can't always prove a negative. But it's about showing to people that not only have we haven't, now I've lost my train of thought on this one, is that it's showing that we can't have gone down the wrong route, because the checks and balances, the oversight is there. So it's not just show me that you haven't. It's like going, and we can't, we wouldn't. So don't try to accuse me, because everything is in place to show that. Or
alternatively, the situation won't always end up that way because of things out of the entity's control. It may well be that we sit in a planning meeting and we always ask this question: is there anything you would like us to look at? Because that's really a lot of, especially after the first year, clients realise we're not the big scary auditor, I mean, I'm 5'1", so I'm not going to tick that box. But they realise, actually, yes, you are human, number one. We can engage with you. And often they'll say, I had one last year, and the usual members of staff weren't in post, and therefore the duties had to get shared out, etc., etc. And one of the trustees said to me, actually, I would like you to look at this specific area, not because I think anything has gone awry, but just because I feel it is our responsibility as trustees to just make sure that this area is okay. And that's exactly what we did. And that's great. Sometimes on the operational level, so that was a strategic individual asking us to look in a certain place. Sometimes at the operational level, and this would be the internal accountant or head of finance, whatever, sometimes they'll say, I don't think this element here is working quite well. I'd be really grateful if you could go in and, have a look, X, Y, Z. And that's a lot of what we do too. And we really like those conversations, don't we?
And then again, we'd then provide a recommendation of how it could potentially work better, or okay, no, that's what we'd expect. That works really well. It doesn't lead to any issues that we've found. And we sort of then, go dive down into it a little bit more for not only for our benefit to make sure that the processes are there, but then the client can go, okay, that helps us on a day to day. That helps us going forward as well.
I was about to say that going forward is it could guide decisions that do or don't need to happen.
Yeah, exactly.
It makes sense. Okay. I'm going to, change tack a little bit here. Another myth about auditing. Fraud is about bad people doing bad things.
No. Often fraud happens because we've got good people who have adopted bad behaviours and have bad habits, let's say. That's often what happens.
Often by trying to be quick or something like that, potentially.
Yes, sometimes it is trying to push a boundary. It's also about understanding individuals, right? Understanding people, because I think you can tell after spending some time with people who's willing not to completely step over the line, but who's willing to think of the child in your class at school who wasn't quite naughty and probably had a great smile and some charisma that the teacher really, really loved them. However, they did push some boundaries, and once those boundaries were pushed, they then got some kickback, and then they realised, no, that actually is the boundary, something I wish my toddler would be adopting right now.
But I was about to say is that is where it first starts, isn't it? And animals, pets, and it's dogs. I think that's probably the only pet you can properly train like that. Is that they kind of go, when I went across that line, I got in trouble. I got pushed back. As a motorsports commentator, I obviously love Formula One. There's a sport that is always about how far can we go to get, to win. But then as soon as they overstep it, it's back again. They're not there to be criminals.
Yeah.
They're there to win in their situation.
But like in the case of Formula One, right, when they overstep and it's legal, it's allowed, okay, well, what was the result? Innovation.
Yes, exactly.
Innovation. And,
yes.
and ultimately, that leads to good things. So it is actually good to work with people like Flair like that. Don't get me wrong. But yes, often, as you say, good people, some poor habits, that's ultimately how it happens.
Yeah.
I made a comment earlier, safety net. You guys, the safety net. And as we're saying there is that, okay, going to those boundaries can lead to innovation and everything else. But the only way I know I can do it is if there is someone to go, hang on, no, you really can't. That's going to be wrong.
Yeah.
And not least, there could be a mistake, interpretation of it.
Yeah.
We're not as knowledgeable as you guys in the interpretation of it all. And I could get it wrong. Or not know that there's a line there that says.
Yeah.
So a good example of that, I think, would be when we have these mistakes. So in the kind of like the accidental error zone, let's call it that. On audit and within in accounts, financial statements, there are certain areas where it is what it says on the tin, right? Think of an invoice. You've got an invoice for stationery. You can't really argue with that because there's the invoice and that's what it is. But there are areas that require judgment. Right? There won't necessarily be an invoice with this is how much this is or evaluation, etc. And in those areas where you have to exercise judgment, kind of two things happen. One, you've got the judgment of how the item, whatever it is, has initially gone into the accounts. Two, then you've got the auditor going in, pulling that judgment apart and looking for evidence that underpins that judgment. Now, what can happen is that within that, there could be motivators. For example, that company has lent money from a bank and a bank has a certain covenant, your gearing or your level of borrowing must stay within a certain range in relation to your turnover and your ability to pay interest, things like that. Now, if something happens and that shifts, we're going to breach the covenant, well, the bank's going to have a big problem with that. Right. So what some people may be motivated to do is, for example, they might have, the initial example I was thinking about was trying to recognize a lease on a building differently. So you're looking at a lease and you're saying, okay, well, the break clause is here and, maybe I could do something with that. And then we as auditors go in and go, actually, sadly not. Take the bank manager out for a coffee or a beer.
That makes sense. I mean, I'd see your accidental wrongdoing zones, and I see that on the notes I have that payroll and benefits, personal spend. Again, that's a very, even for me, where I don't necessarily need a full audit, I can sometimes find the personal spend a bit of a trapdoor.
Yeah.
It's very easy to do, I think, now that there's so many easy ways of spending, Apple Pay, Google Pay, anything like that. Simply clicking on the wrong card and not realising it. If you're banking with the same bank personally and with your business, it's as simple as just going like that, and then you look back at it, it's Amazon, that'll be business related. But then realising, you've
I did it with car parking. That's one I've done. Accidentally just went, go and forget that the default card was the business card because I'm normally parking for business reasons and I was with the family and it's like, heck. And it's like, right, I'll have to sort that out afterwards. And it's easy to do.
Yeah, exactly.
It is. And it's something, so personal spend in particular for directors, is something that the revenue is such an easy challenge. So that is definitely an area, where you look at, so when we talk about these, most audit risk comes from good people building bad habits. What we would do is identify those habits, and then that's where we're going to look. So payroll, benefits in kind, that's a really easy one. So you often find that businesses don't realize, they think, do you know what? We would like to become an employer of choice, and therefore we are going to offer private medical, gym membership, etc., etc. All of that attracts a benefit in kind. And often it's ignorance in that instance. People don't realise.
Yeah, and I think a lot comes under that one. Blind trust in systems. We've already touched on that with one of the others. That can easily be a mistake. Just this once. And I know you've put that in timing habits. So it's not actually doing it when you shouldn't. It could be the timing that you do it. I'm judging from that. So that becomes something you have to look at as well.
Yeah, you often see this in something that we call window dressing. So this is when a decision is made to either push or pull income into a period that it doesn't relate to, or push and pull expenditure. The impact of this could either make profit go up or go down. But again, we're looking for motivation. What motivation would be around, this is why it's so important to speak to the client and really enthrall yourself in the business. That's where we mostly see that. And you'll see, okay, just this once, because they may, the corporation tax rate has risen to 25%. And over the last couple of years, that's been quite significant for businesses to, I don't think you're ever going to get an appetite for it, but to swallow. And you may find that people are trying to move profits out of the current year because cash-wise, they can't pay the CT.
Yeah.
So they're trying to reduce their cash exposure.
Got you. Question that I'm going to raise then, another point you got here that I don't understand, so I want you to explain, hopefully. Inconsistent estimates year to year. What does that mean?
So I think one of the more common estimates that you get with clients and companies in general is depreciation. So where you have assets like a computer, car, sofas, things like that, they then get written off over their useful economic life. So you've got a car, say the value of the car to the business is only going to last 3 years. So you'd write it off then consistently over those 3 years. What we see sometimes is that they've gone, okay, well, this car, is built for longevity. We'll write it off over 10 years, or, we'll write it off over 2 years because it's a Porsche and you drive it out of the factory and it's already lost 100 grand. But then making sure that those estimates that are applying to those accounts are being applied consistently. So that goes back to one of our first points discussing about disclosures and the notes you have in a set of accounts, that making sure those notes are actually being applied.
Got you. Fair enough.
But
that makes sense.
The motivation behind doing that, if you think why a director or someone in a business would want to change depreciation rates, well, because it manipulates profit.
Yeah.
So if you change the rate, you can make profit go up or down.
Yeah.
So
I was also thinking of another one from your comments there is WIP, working in progress. It's probably another big one.
Exactly.
That do you, don't you, did it actually happen in the end, or, all those kind of things. And there could be a totally legitimate reason to do that. But I guess your number one question is why?
Yeah.
And not because you're on that witch hunt, but because you need the narrative. You need to understand, right, okay, I see you've done that. Why? Why have you done that? What was the objective?
Yeah, it's largely based on profit more than anything else. So I think one of the book ones, when you're doing your studies, they say, well, why might they have done this? What's the ethical threat that surrounds this? And the one that studies always say, well, if you're increasing profit, so it's, 10% gross profit margin or 5% net profit margin, why have they done that? Oh, conveniently, the director gets a bonus if they get a 10% profit margin. Yeah. So then sort of like, you then go down another rabbit hole to go, okay, well, what is the reason for doing this when we believe it should actually be in the future period or be brought back for an expense?
And again, a lot of that can just be lost in short-term gain over understanding what should or shouldn't, or it's beyond the line, as we were talking a moment ago. I get that. Okay. I like that one. Another audit myth that we're going to try and bust. Audit hasn't really changed. And it probably does have a stigma about being stuck in time. But the fact that this is in here, I'm assuming that isn't strictly true.
No, I mean, audit has changed significantly.
Has it?
There's a lot more based around sort of internal controls. So where we were saying before about fraud being detected and stuff like that, it's all very based around the controls of a business. So if they have their controls, we make sure that their controls work correctly by just tracing, a purchase all the way through, a sale all the way through, and making sure that they are being applied in an efficient way. There is more work now that needs to be done to make sure that they are being done correctly, and making sure that we are then reviewing those controls. One of the things I wrote down is that auditors must detect all fraud is a misconception, because we are now being given so much responsibility when auditing a company, a charity, an academy, to make sure that any errors are picked up. We should be doing that, but that's not actually our job.
No.
To detect fraud. It may be that we detect fraud as part of the processes that we're doing for an audit. But there have been, some of the big four audit companies, they're missing fraud, but actually their testing isn't surrounded around that.
And that it is our job to look at, not to detect the fraud necessarily, but to assess detection risk.
Yeah.
That is absolutely our position. And our regulator over the last few years has really increased the amount of work that an auditor needs to do. And I don't mean this for anyone watching to get out your little violins and have a go for us. I don't mean that. What I mean is that if your auditor is asking you more questions, that's why. Going concern. So going concern is a business's ability to maintain trading for 12 months from the point of signing. That is what we have always had to look at. It's a fundamental part of our audit file. And even you're not audited, but every year you should be considering, and I know your accountant does this for you because we are your accountant, so we help you with this. You need to consider the business's ability to continue trading for the next 12 months, right? And if there is any material uncertainty, then there would be a note in your accounts that would say that, which there is not, so don't worry. And I know you read them now, so. However, since COVID, the ICAEW, our regulator, then said, okay, now you need to look at 12 months and beyond. Now, our initial, and I think I can speak for most auditors here, the initial somewhat cynical response to that was, just go grab my crystal ball, give it a shine. It's really, really difficult. One that hit me quite hard was, Tom mentioned we need to look at the internal control environment. This is literally how you operate your day to day. Okay. And within that, we have to look at IT systems. Now, Rob, our audit partner, thought this was hilarious for me because I have genuinely sent my work laptop to IT with a screen that was broken. That wasn't the case. The cat had walked over it and the brightness had gone all the way down to nil. I'm not joking. But I found myself in a position where I'm having to talk to companies, to their IT department, or be an external consultant, and discuss firewalls, backups. I do a lot of bedtime reading for this, but the onus on us has increased significantly. And also for the companies that we're auditing, risk has changed. Think about how we used to communicate now versus how we did 10 years ago. Think of AI, we're in an evolving world. And for me, the biggest change, and maybe this is more down to how we are as a firm, but culture is entirely auditable. And when we go into a business or a charity or whatever, in particular, I'm looking at culture, I'm looking at behaviors, I'm looking at patterns, because one of the first things we do on a file, in the planning stage, is we talk to the client. We research online. So I'm looking at reviews. I'm looking at Trustpilot. I'm looking at press. We're looking at all these things, and it starts building a picture. I'm going to call it a set of expectations, right? Those expectations are further informed by me talking to the client, me talking to those charged with governance. So that would be a trustee, a director, etc. And then we actually look at the numbers. So we've done all of that. We've looked at related parties review. We've done all of that. We've looked at your key customers. We've looked at your key competitors. We've built that entire picture before we've actually spoken to you properly. And then we're looking at the numbers and going, right, how do these numbers and the movement align with our expectations? And that's where the real work starts.
Because that's giving it context, isn't it?
Totally, yeah.
That's the big thing. I mean, I do feel for you guys. I mean, like, for example, that one of the changes that is coming by the looks of the notes is auditors must now assume fraud risk exists. And yet we've been talking very much about how, you're not on a witch hunt. and yet you've been kind of forced down this route that goes, actually, you've got to assume the worst and prove it's not.
Yeah, so we've always been required to assume that fraud risk exists. What's changing, what's evolved, is that the amount of work that we have to do around this point. So if you think of, and I'm not going to give examples, but large firms who have been caught out with audits gone wrong, sometimes the findings are that there wasn't enough done on the file in order to mitigate against the risk of fraud, for example, or etc. Patisserie Valerie, I will mention that one. It's not not particularly contentious. We should be doing more, is what the ICAEW has found over the years. So every year, the ICAEW will issue where they think audits are going wrong, because we are required to be audited as auditors by our regulator. So they come in and they look at, are we doing the job properly? They collate all of their findings and then they issue, right, this is what we're not doing very well as auditors, guys. And this is where we need to focus. And off the back of that, over the years, this is where this fraud point has developed, together with going concern, IT.
Yeah. Well, I mean, it all makes sense, definitely. They could be those weak points, couldn't they, inadvertently, for internally and externally. Okay, another myth. Audit is the same for everyone. Discuss. Is that correct?
No. So, every sector is faced with different challenges and different pressures. And that's just operating day to day.
Yeah.
Now translate that into audit. Audit looks very different for different sectors, and the challenges that those boards are up against. So what I've done is I've split broadly between three sectors that we work with, right? And I've done a starting quote for each one, as if I am a trustee, or later for an SME, as if I'm one of the directors, right? So let's start with academies. So if I was a trustee, a statement that I may be saying is that we are under more scrutiny than we realise. And the reason that is because academies are governed by the ESFA, which is now the Department of Education. And as academies have evolved, every year a book gets issued called the Academy's Trust Handbook.
Oh, wow.
And this is basically the Bible. These are the laws that we all must live by. And each year, the onus has just got heavier and heavier and heavier. And in particular on resources for the Academy's workforce and the trustees. And now the stance appears to be that if things are going wrong, the first place the DFE are going to look is at governance. And a really common mistake that we see, and it's something that we identify on the audit and we report back to academies, to the board specifically, we will see examples of very, very good governance, excellent in some cases. The problem is not evidenced. So your primary source of evidence as a trustee of an academy is your meeting minutes. And in those meeting minutes, you need to demonstrate financial oversight, effective governance, and with that challenge, governor challenge.
Oh.
Very, very, very important. The other side of that is within an academy set of accounts. I don't know if your children go to an academy or if you've ever been bored enough to end up on on their accounts. They're like 60 plus pages long.
Wow.
And much of that is because of a document at the front called the Trustees Report. And this will be a document from the Chair of Governors and one followed by the head teacher as well, which basically talks about what's happened in the year, what risks the academy is exposed to, what's happening in the future. And a great place to show effective oversight from trustees and challenge is by actually shouting about it in the Trustees Report. So when the DFE come in, if they come in, they're seeing minutes that show great oversight, effective governance, challenge, etc. Then they've got a public document that mirrors.
Yeah.
Even if the financials do not paint a great picture, the point is, what are you doing about it? That's the point.
Yeah.
And that to me it's key.
So that's academies.
That is.
Next.
Charities. So if I was a trustee of a charity, I would be saying, this audit, this is about public trust and my responsibility. And actually that's quite scary. And I'll tell you why. Imagine you have a £10 million turnover business. You have to run that business. You are responsible for that business. You're responsible for the internal control environment, etc., etc., etc. But then I tell you, no, let's go the other way. How many hours per week would you want to do that job?
If it was my company?
Yeah.
Probably a lot more.
So if I was to then say to you, okay, you've only got 40 hours at best in a year, how would that make you feel about the risk you're taking on and the responsibility?
It's not enough, is it?
No, it isn't. Not at all.
Yeah.
I think trustees, both of academies and of charities, are in really difficult positions. They're voluntary positions. None of these individuals are paid. These are great individuals, often very skilled individuals who have taken up their personal time to give to these charities, and they've taken on the responsibility and everything that else that goes with it, but with a really, really short amount of time or, lack of resource. So an audit, a good set of auditors, having the audit of the accounts completed, produced timely, great recommendations, etc., so important because you aren't available to have the oversight that all of that would require because you've only got 40 hours.
So you are having that personal protection there as well then for that person that's only able to do the 40 hours in a year or whatever it might be.
Absolutely.
They might know they're doing their job properly, but to have that audit going on that shows that everything else, I'm going to use the phrase checks and balances, which I probably shouldn't because in accounting that goes even more financial, doesn't it? But it's across the board. So it's a safety net of within as well as without.
Yeah. And if audits were, as the conception often is, a boilerplate, just a load of tick boxes that you're checking. If audit truly was that, then I don't think any of these trustees would have comfort. No. It's because we look at the full picture and we engross ourselves in the processes and the systems. It's because of that hopefully we give these trustees comfort. And
report it and a narrative to it and analytics. Because otherwise you'd kind of sit there and go, they wouldn't go and join that charity. They're taking too much risk. And
a point that Tom made earlier, which was very good, is that the donations wouldn't keep coming.
No. Absolutely. I mean, and I think I tried to make the point is it might not just be that you're not doing anything wrong, and let's just call that not mistake, legal, whatever, but it's by showing, look, you can't accuse us of it. Everything is there. Yeah. We've just had, sadly, a slightly different topic, but it's a similar principle. The fire over in the ski resort. It was that New Year celebration, I think, wasn't it? Yeah. Now, it's probably a bad example because I think they have been very, very wrong, but they hadn't had a fire risk assessment for 4 years, I think it was. Yeah. Now, they may not have done anything wrong, but because you haven't had that done for 4 years, you cannot prove to me that everything was okay.
You appear negligent.
And so it's and that's exactly it, is that going, you need to have these audits done to kind of go, no, go, there is no need, there's nothing to see here. Yeah. Move on. Even though without that audit, you still might have been absolutely 100% above board. It's about showing that there's nothing that you can see here.
Yeah. And it gives confidence to people. Like, would you want to give a lot of money in a will, or would you want to give a lot of money, that you've earned yourself to a charity that is then going to spend it on a hot tub, for example? Yes. Like, the whole Captain Tom thing. He raised all this money walking around, and his daughter then bought a hot tub. That was then, we come in and then provide that, additional level of security that people can then go, okay, well, I feel confident giving money to this charity.
Or time, or whatever it happens to be,
because they are benefiting the community, they are benefiting, their cause that they're reporting in their accounts, but also, it's going to the right place.
Sorry, just one point that I think is really important to build on here is that an audit isn't a fail-safe, right? So yes, an audit is comprehensive, okay? They're not cheap either. No. So you should absolutely be getting your money's worth. However, it's a little bit like, what were the jewels that were stolen recently? Before Christmas, a few months ago.
Was that the ones at the Louvre or whatever?
Yes.
Yeah.
So you can imagine what the security is like there, right?
Yeah.
And in my brain, I'm like, there's lasers, and they did a little dance to get there.
Yeah, there was a film about
it. Must
it.
have been, yeah. However,
Tom Hanks was brilliant.
Johnny
English as well. Yeah.
I'm sure that, their security was fairly robust.
Yeah.
Yeah. However, it didn't stop the theft from occurring. Yeah, it didn't stop them, right? So, audit isn't a complete safety net, right? It doesn't mean that nothing is wrong. It means that, we've, throughout the course of our work, which is held to a certain quality standard, an international quality standard on auditing that our regulator is really, really hot on, it means that we've conducted our work to that standard, and therefore, nothing has, the statements show a true and fair view. That is ultimately what the audit opinion is. It's a public, it's signifying public statement signifying trust, okay? Yeah. But it's not a fail-safe, right? It doesn't mean that there was nothing wrong. We talked about samples earlier. Somehow, I don't know why, auditors just seem to be good. It is often random and haphazard, but we do seem to be good at picking ones that...
Auditors magnet.
The
one that's wrong out of 1,000.
And that's auditors in general, not just us.
Yeah.
But, throughout our best efforts, it doesn't mean that you're always going to find something that's wrong. And I think that's something really, really important to point out, because often when the public see it go to pot for certain companies, or, God forbid, there's been some horrendous fraud, Maxwell, that ended up in, people lost their lives, right? Yeah. People commit suicide over that. That's not a joke. But you cannot find everything. In some cases like that, I wish we could.
Yeah.
But you can't. And that's the reality. Very much like, the Louvre. There's only so much security. I mean, I'm sure they're amending that, they're adjusting our systems.
Yeah.
But it's not a complete fail-safe.
Well, same as IT, you mentioned that in the audit, the IT suddenly comes into it, and it's like, just because you've got all of the security there doesn't mean it's not going to get breached. But then that's why it's looking at all the other areas to go about what happens if it does go wrong. Therefore, it's not the fail-safe to go, it now won't go wrong. It's about, okay, what do you need to do? What's the cover that you've got? What's the reactions all set in motion, ready if you need to press the button, so it makes sense. Academies, charities, but I noticed that your third one you were going to look at here is not just commercial organisations, but very specific here you've gone for this. Yeah. And this is relevant to me, because it opens this up to more areas of commercial organisations by the sounds of it.
So yes, this one is aimed at corporate entities, but SMEs. So that is small to medium enterprises.
Yeah.
And the quote I've come up with here is that HMRC is quietly paying more attention to people like me. Now, we don't all know what is on the revenues agenda. However, I think when I came up with this, I kind of threw this across several people, in the firm, and the response was unanimous that yes, this is absolutely what we think, that HMRC isn't necessarily worried about these big corporates at the moment, and they are very quietly focusing on the smaller guys. So when you have things going through, like we talked earlier about personal spend, taking the biscuit with personal spend, the whip that you talked about, that's trying to manipulate profit. Benefits not being taxed in the way that they should, or one that they are very hot on at the moment is your dividends that you've been taking from a company not reflecting what's on your tax return. Things like that are what the revenue is quietly focusing on in our opinion. And I think that's a very important message for SMEs.
I mean, it does sort of show that whole thing, though, is even where you've taken us down those different avenues, is that it's a very different picture. So audit definitely is not the same for everyone. If we go back to the original myth headline, it's very different what they need to do, why they need to do it, what you guys have got to look at in more detail. So there we go. That was another one busted. To bring this all back together and wrap this up into a final conclusion, your phrase that you threw at me here is, if someone could only do 3 things, what would they be?
Capture evidence. We talked earlier about academies, evidencing good governance in minutes, trustees report, etc. It's not just academies. Corporate boards and charities should be doing the same at board level. Operationally, keep the paperwork. Yeah. If you're exercising any areas of judgment, you've got valuations for land and buildings, things like that. You get the paperwork in. I know it's not nice to pay a surveyor a lot of money to come up with a somewhat made-up figure in the accounts, but play the game. Yeah. Just play the game, but evidence it. Even if you have made certain decisions, the important bit is the justification, and then the evidence of that justification. Because once you slept on it, it becomes quite difficult. So yeah, that's number 1, I would say.
Yeah, and then from our side, when we're then auditing, it makes our lives easier. We don't have to ask as many questions because everything's there.
Yeah.
It's all documented. We can see, okay, well, what's this transaction? Where's the evidence for this? Oh, there's an invoice. There's the meeting minutes, and we can then use those to make our.
And I've never realised quite how important minutes actually are. And I picked up on one of the phrases you used is about challenging. To see in the evidence in the minutes that someone's gone, why have we done that? Whatever, those kind of things. And that makes sense. So captured decisions with evidence, that definitely stands out to me. Yeah. Second one.
Think risk first, not necessarily numbers. So we've already busted this on this episode so far. However, people think audit is just about pulling apart numbers and that we'll just be shut in a room just thinking about audit, and just the figures and a calculator, maybe some pen and paper. No, it's about risk. Now, if it's about risk for us, it should absolutely be about risk for you. And when thinking about risk, identifying them, deciding how likely they are, what the potential impact may be on your business or your reputation, etc. When doing that, and then deciding how you may mitigate them or even tolerate them, you can't just do that once and say, oh, well done. That's done. It's fluid. So in larger entities, what we'll see is something called a risk register, right? Really, as a firm, we have one really, really useful document. The moment this document becomes useless is when it stops being fluid. So visiting a risk register, really, really important, but also such a good tool. Yeah, really, really useful tool to have. So if you think risk first as a business owner, I'm not necessarily suggesting you need to go and create a risk register, et cetera, et cetera. I'm saying think about the risk that your organization is exposed to, right? You could have risks internally, control risks. You talked about detection risk earlier with fraud. You might be a business that takes a load of cash, but you've got high turnover of staff, things like that. Think about those risks and what effect they could have, and can you do anything about them, or do you want to do anything about them? And I would go as far to say, if that is your approach, when it comes to audit, you'll be in a better position, much better position. Do you agree? Yeah,
definitely. I think, like you say, that auditors are, their view, and the view of auditors, is that we are primarily numbers. But actually, no, it's everything that then surrounds that. The first myth that we looked at is it just the numbers? No, it's everything that comes with it. It's the controls, it's the risk of everything within it, and how they've actually then got to those numbers.
No, I definitely clocked that, because it was hearing you that comment about the auditors being put in a room with a calculator and a pen, is that was always that perception. Oh my gosh, the auditors are in next week, right? Let's get them in and get them out as soon as we possibly can. It's like, well, actually, no, it isn't. They're just not just there to look at your account system and just do the numbers. There's a lot more to it. I'm going to say the third one of the final steps, because I think this sounds better coming from someone outside of Optimum for this one, because I do agree with it. And that is, choose your auditor wisely. You're not just buying a certificate. You are buying the expertise, the judgment, the perception, the interpretation of these experts. And so it is right to choose. And I just felt that I wanted to say that one to start with, because of course you're going to say that about Optimum without question. And I do back that one up. But anybody does need to choose wisely. They have choice, don't they?
Yeah.
Yeah, you do.
Yeah.
And I think it's not just audit with most professional services. What you're buying are people, right? Relationships. That's what you're buying. So in the specific to an auditor, you're buying the people and their approach. Don't necessarily go for the cheapest quote. I know it's expensive. I know. I know it's expensive. And believe me, there are not significant margins in audit for the amount of stuff that we have to do and paperwork we have to fill out. But choose a pragmatic auditor whose personality and approach fits with what you need. And that can at times be different to what you want.
Yeah.
And I think that's a very important distinction.
Not a computer says no kind of black and white interpretation. It's like not ticking boxes. There's a lot more to the story. Yeah. And I've clocked that just from this alone, that it makes sense. I think that brings us round to a close on that one. The whole idea was to bust some myths on audits, but equally I think it's been a very informative discussion that we've had about it a lot more. And I know it's not necessarily the most popular topic, but I guess it's a necessary evil. But hopefully what today's conversation has done for everybody is to also open up how it is to your advantage. It is let people externally have the confidence in you that you feel they should have. And this is where you come in and you're able to evidence and interpret and everything else.
Yeah.
So it's been absolutely brilliant. Thank you so much for chatting with us.
Yeah, thanks for having us.
Yes, thank you for having us.
You said beforehand you were worried that it was a dry topic, but it's such a deep, so much information around it that I think it's really been educational. So thank you very much.
Good. Glad you enjoyed it.
Thank you for joining us, everyone. If you've got any questions, even if it's, early stages or whatever, please get in touch with everybody. optps.co.uk is the website, and you can get in touch with the team, and we'll see you on the next episode. Cheers.